Hello traders, Gary Wagner here. It is 11:55 in Honolulu, 5:55 in New York on Friday. Happy Aloha Friday, as we say in the islands. It is the second day of September 2022, and this is the daily report for gold and silver, our weekend review. This was an interesting week for gold, closing lower on the week now for the third consecutive week, but closing higher on the day. We had a slight recovery today, gaining $13.30 in the December contract, which is currently fixed at $1,722.60. Yesterday's sharp decline was absolutely due to dollar strength. You can see this candle here showing a tremendous 1% upward move in dollar value, going to almost 110 on the high. Today it closed just off of yesterday's close at 109.60, although it declined by 0.07%. Lastly, a slight recovery in silver, with the most active contract of September silver gaining 25 cents and closing at $1,791. Today's show will be a little bit different in that we're going to take a long-term look at gold, specifically the price point of $1,680 and why I believe that that is a critical level of support. On this report, we want to focus on a long-term perspective of gold, starting with this monthly chart, which looks at how gold is traded over the last 10 or 12 years, and how it relates to the price point of $1,680. Historically speaking, in the middle of 2011, gold hit its first all-time record high, just above $1,900 per ounce. From there, gold prices would oscillate between a high of approximately $1,800 and a low just above $1,500 until we had a hard break towards the end of 2013. That is this candle here, which really marked the beginning of a multi-year correction, which ended at the end of 2015, beginning of a multi-year rally that started in 2016, which actually took gold to its now all-time record high at $2,088 per ounce. I have highlighted this candle here that occurs in December of 2012 because it was the last occurrence of gold opening above 1,700 and closing below 1,700 prior to gold trading in both the multi-year correction as well as the multi-year rally. But from this time point, December 2012, the first instance in which gold closed above $1,700 occurred in April of 2020, and it is this long green candle that represents this on this monthly chart. From there, we can see multiple instances in which the price point of $1,680 and $1,700 were challenged on a number of occasions. Following that, there was a 10-week period. This instance, the flash crash, and the most recent occurrence here. And on each of those four occasions, we saw gold challenge but hold $1,680. I've now put up a weekly chart of gold futures. This red line indicates 1,700, and below it, the solid black line represents 1,680. We can easily see that prior to gold breaking above $1,700 per ounce in April of 2020, this particular price area actually acted as a level of resistance. In April of 2020, we saw the first time that gold challenged and closed above 1,700 for the first time since December of 2012. More importantly, we can identify that particular candle in April of 2020 is the moment in which the price point of 1,680 flipped from being resistance to support, and would also mark the beginning of when 1,680 became a key and critical level of support, not only for the 10 weeks following the first rise above $1,680 in 12 years, but on 3 more occasions marked B, C, and D. In March of 2021, there was actually two instances where on a weekly chart, we could see $1,680 being tested, but holding as a strong level of support. In August 2021, as well as July 2022, we would see this price point tested on two more occasions. This is when the flash crash occurred, and as I said, the most recent occurrence is in July of this year. On all four occasions, we had the price point of $1,680 tested, and in each of these instances, it held as a strong level of support, which brings us to our current pricing, with gold trading to a low this week of just below $1,700 an ounce and recovering above that at $1,722. It is for that reason that I wouldn't be surprised if gold challenged $1,700 next week on a closing basis, breaking below it. But I also believe that if that does occur, that $1,680 should hold as an effective and strong level of technical support. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Tuesday following the Labor Day weekend. Have a great weekend. Bye-bye.